Market direction is the single most important thing every investor needs to know. Before the October 10th market drop, VectorVest was on it. A first warning on August 31st. On September 26th, VectorVest flashed 3 red lights and advised a downside bias. On October 4th, a major confirmed down signal. And on October 5th, we warned investors that a further sell-off was likely. How's that for clear direction? Test drive VectorVest for yourself 30 days risk-free under $10. Before you invest, check VectorVest.
Good afternoon, everyone, and welcome to our YouTube live stream. My name is Glenn Tompkins. Glad that you're here. This is going to be a very interesting and informative webcast, actually live stream, that we're going to do today. And it's probably going to open up doors for many of you who are currently investing in the market. And for new people, what it's going to do for you is start to get you thinking down a path of a different means of being able to make money in the market. Welcome to our live stream for the third part of our mini-series called The 7 Secrets to Making Money in the Market. We've already gone through 4 of them already. 1, 2, 3, 4. We've already gone through 4 of them. Joey, can you have that slide up for all 7? And if you don't, that's fine. I can recap what all 7 are. All 7 are, let's go see, keeping it simple. So I talked to you through the ways of learning how to use the market, but keeping it simple. A lot of people who are not in the market currently are there because they think that the market is too confusing. So what we did on secret number 1 was talking about how to keep it simple. Then we talked about learning how to read graphs. No matter what stock you're interested in getting into, we talked about being able to effectively reading a graph to help you to make the right decision. A lot of times there's a bad time to be in a good stock. And sometimes a bad stock could be turning into a good stock. So what do you look for in the graphs to determine whether it's the right time to get into the stock or not? Then we talked about heeding the color guard. That home page provides you with a plethora of information to know what's going on. So learning how to read or heed the color guard, that's your traffic light into the market. Green, yellow, red. Green, it means it's good time to go buy stocks. Yellow means slow down on your investing and on your holdings, making sure that you tighten stops on stocks. That way you don't incur big losses. Number 2 about looking at heeding the color guard, knowing when to not let a stock get away from you as far as a loser. So that traffic light serves the purpose of locking in profits and mitigating losses, okay? And the last thing that we talked about so far was exploiting the home page. That home page and that color guard, put those 2 together, they are a powerful combination or a great recipe to putting yourself in a better position to make money. Notice that I continue using those words, a better position to make money. That's what it's all about. No matter who you use as far as a service, whether it's us, your broker, or another service, it's all about having the useful information to make the right decisions. You may buy a stock and the stock goes up and you think, man, I'm a genius. And then you keep doing that and suddenly what you thought you were doing was the right thing, just by luckily picking stocks, turns out to work out against you. When that happens, you know, you got to be careful, and being careful means knowing what to do and when to do it. All right? So heeding the color guard, looking at that home page is crucial, not just important, but crucial to making the right decisions at the right time. So put all that together. Those were the first secrets of making money in the market. This week we are going to finish up this series with looking at the last 3 secrets. The last 3 secrets are, go back to my little paper here. The last 3 secrets are learning to trade options. Now, a lot of people are already going to hear those words or hear that word option, and you're going to get turned off right away. Before you decide to move away from this presentation, allow me to get you a better understanding of how options work. People say that options are too risky. Let me explain something. Options were designed to be less riskier than stocks. How do I mean that? Well, when you buy a stock can go up, a stock can go down. The most money you can lose on the stock is the stock going all the way down to zero. The most money you can make on the stock is unlimited as long as the stock's price is going up. So why is it less expensive? Why is it less risky to play options? Because with options, I have a predetermined amount of money that I can lose. I can't lose any more than that. On some trades, I have a predetermined amount of money that I can make. I can't make any more than that. So when I say that options were designed to be less risky, I ain't just whistling Dixie. Options by design are made to be less riskier than stocks, so you should learn how to trade them. Secret number 6, stay informed. We're going to get into that. And secret number 7 is being an optimist. So 5, 6, and 7, learn to trade options, stay informed, and be an optimist is what we're going to cover today. And again, for many of you who are not comfortable with options, before you turn away from this presentation, let me simplify the whole world of options for you. That's what I'm going to do when we get into secret number 5. Now, secret number 5, which is learn to trade options. All right, stay informed and be an optimist. Those are the 3 things that we're going to cover today. I like that I can do that. Move closer. There we go. Learn to trade options. Oops, can't do that. Stay informed and be an optimist. That's what we're going to cover today. The software that we're going to use is called VectorVest. Company has been around since 1995. We've been around for a while. And I think that the information that you're going to get is going to be a game changer to many of you. And for some of you who are currently using the software, it's going to be a refresher. And it's going to also bring back things that you may not always be doing. I think that sometimes when you look at these presentations and you say, yeah, I know this, but then you go back and you look and say, wow, yeah, I knew about that, but I stopped using that. And those little bits of information will still continue to make a difference in what you do in the market. All right, so that's what VectorVest is all about. As I've told you, I've been with VectorVest now for 14 years, about to push 15 years. Bruce says, hi, Glenn. Hello, Bruce. How are you? And I encourage anybody and everybody, if you want to chat, please chat. But also keep in mind that everyone can see your chat, unlike what we do in VectorVest on our webcasts. So if you chat, please, by all means, chat. I encourage to chat. Ask your questions, especially if you are new to options. No question is a dumb question. No question is a dumb question. This is a great opportunity to get a better understanding of options. Ask your questions. All right, I'm primarily going to stay in slides for secret number 5, which is learn to trade options. So Joey, put them into that for me. All right, and I'm primarily going to stay in the slides for this as we go along. Where's the mouse? I lost it. There it is. And I'm going to keep up I can move this over to over here? Mm-hmm. All right. So the 5th secret, all right, this is now ending the 3-part series. The 5th secret, learn to trade options. Now, why is it important to learn to trade options? Oh, I took it from you, Joey. Let's start off. All right. Options can be used to do a few different things. All right. Provide leverage. And we're going to go into these individually. It will provide leverage on your trades. How about if you're knowing that a stock is trading in excess of $100 to $200, how can you effectively trade that as a trade? Options will help you to provide leverage to be able to trade stocks that are up in excess of $100 to $200. Okay? Reduce the risk. Remember, I told you that options are primarily made to be less riskier. We're going to explain that as well. It lowers your costs. All right? We can generate income and increase alternatives in being able to make money. You notice that the last statement there says, but they must be used properly. And this is where people get confused on, man, options are no good because they just don't work, and I've gotten burnt on more than one occasion. So understanding how to use them properly is going to build your confidence in being able to play options. Keith says, hi there, rookie investor here. Should I trade regular stocks for a while before going to options? My answer to that is yes. Learn how to effectively use market timing. Use that traffic light on the home page of the VectorVest software to know when to get in, invest in stocks that that are part of how you invest in the market, and knowing when to get out, knowing when to buy, what to buy, and when to sell. Those three things you need to concentrate on. And I can take everyone here down all different types of paths. But if you're a new player to the market, my suggestion is look at the first 4 secrets, especially the first one. Keep it simple. Keeping it simple means getting confidence in what you're already doing or learning how to do, Keith. Learn that first before you venture off into everything else. Nail that down. Does that make sense? Hopefully it does. Nail that down first before you get into options. But if there are people in here that are already comfortable in what they're doing, options is another tool in the tool belt to help you to make money. Right now, your tool belt is thinly lined. All right, there's not a lot of tools in there yet. Use the tools within the VectorVest software to hone your craft. And as you then hone your craft, you can now better yourself by learning other things, and options is a good thing to learn. So hopefully, Keith, that made sense. Joey will bring the chat back over to me if there's anybody else that chats in. All right? So keeping that in mind, understanding that they must be used properly. If I click on that, there they are. They must be used properly, and we're going to talk about that. So let's talk about providing leverage. Margin accounts provide 2-to-1 leverage in your trading account. So if you get a margin account, if you got $100,000 in there, you can now use up to an extra $100,000 of brokerage money. That increases your leverage. It increases both risk and reward. So now if I have $100,000, but I'm using $200,000 to invest in the market, I can grow my reward exponentially. But if I lose money, I can lose money exponentially. So now, 2-to-1 as far as a margin account is concerned. When I look at options, though, talking about leverage, I have 10-to-1 leverage. How does that work? That works because, remember I talked about stocks that were up in excess of $100 to $200? An option, 6-month option at the money, tends to cost about 1/10 of the price of a stock. Say, for instance, putting it into an example. Let's say that I have a $250 stock that's rocking. Well, I don't want to spend $250 per share. If I do that and I want to get 100 shares, what's that, $25,000 that I have to put out of my pocket to trade 100 shares of that $250 stock. Is that right, 25,000, or is it 250,000? Somebody type in the room. My math is horrible. My math is horrible. Can you mute me for a second? If I have $250 stock and I want to get 100 shares, I think that might be $250,000. Might be. Anyway. 25,000? It's 25,000. Thank you. It's $25,000. All right. So now, would I rather lay out $25,000, or if the option is 1/10 the price of the stock, that now becomes $25 to trade the same amount of shares by way of options. Now, options are, when they're bought in lots of 100. That means it's one contract. So I can control 100 shares of that $250 stock at the price of $2,500. Would I rather control the stock outright at $25,000, or control 10 shares of that stock, 100 shares of that stock at $2,500? So that provides leverage. And especially if I don't have a lot of money to trade in the market, options may be a good way to go, providing leverage, so I don't have to use as much as my money to play the market on that more expensive stock. It lowers my value. It lowers my costs. It reduces risk when used properly. How does it reduce risk? So if I have 100 shares of that stock, the stock goes down 50%. I've lost 50% of my money, my investment, right? But when you buy a call on a stock, okay, that's what that 10-to-1 leverage. 1/10 of the stock's price equals out to $25 a share. Okay, 100 shares brings out $2,500. If the stock goes down 50%, the most I can lose on that option is the premium I paid to get into that trade. If the stock goes down 40, 50, 60%, I can only lose the premium I paid for that option. So it reduces your risk because I have a set amount of money that I can lose on the trade from the onset, whereas I don't have that when I buy the stock outright. So when you can reduce your risk and increase your leverage, spend less money to control the same amount of shares, and I'm capped out at how much I could lose, that not only provides leverage, but it reduces your risk. So for any of you who sit there and say that options are more risky, they are by design led out to be less risky. And I think a lot of people who are new to options don't understand that. The most amount of money I can lose on an option trade is the premium I received or premium I paid out. That's it. I can't lose any more than that, no matter what the stock's price does. So options will provide leverage, especially if I don't have a lot of money to invest in the market, but I want to take advantage of what's going on in the market. Options are a good way to go. But I'm still going to go back to Keith's question. If you are still new to the market, I would rather see you start to hone in on your skills to know when to buy, what to buy, when to sell. Once you get comfortable with that, Keith, then options are a great tool to add to your tool belt. All right, so you going to bring something over, Joey, or not? Okay. So let's talk about the next slide, which is reduce the risk. You use less capital to control an asset. So instead of putting out $25,000 out of pocket, I put out $2,500 out of pocket. Let's say I lost all of my money. Would you rather lose $2,500 or would you rather lose $25,000? The options will reduce the risk because of the less capital that I have to lay out. You buy put options to protect the single stock positions. So if a stock is going down and I don't want to lose out on getting the stock just go down, if I buy a put, I protect myself, reduce the risk of the stock's price going down. So I still own the stock, but a put option will help to alleviate some of the downward selling pressure or capital loss in my portfolio. Example, let's say I still own a stock, and let's say it's a $20 stock. I own the stock. The stock starts going down, but I know for the long term it's a stock that I want to hold on to. How can I protect myself without giving up that stock? I can buy a put option. As long as the stock's price is going down, that put option will increase in value. That helps to offset the price depreciation of that stock in my portfolio. So I'm reducing the risk of owning that stock long. So yeah, I own the stock, but the stock goes down. If the stock goes down 20, 30, 40%, that could be a big hit to my portfolio. But if I trade a put option, now that 20, 30% may only end up to being 5, 10, maybe even 15% loss because that put helps to offset the price depreciation in the stock. So it reduces the risk even on stocks that I own outright. Use option collars to protect an entire portfolio. So instead of getting out of my long-term holdings in my retirement portfolio, and when a bear market comes, man, I'm going to sit through a whole bunch of loss. You don't have to. Learn to buy a put and sell a call, which creates a collar on your full portfolio of stocks. You will do that collar on an index. So that index going down will protect you against the capital depreciation in your portfolio. Buying a put, we also call it a married put, helps to reduce the risk on a stock that you own long, whereas an option collar protects a whole portfolio of stocks. Now, let's go see, how do you trade? Don't start, Jay. I know that you're here. Don't start. Don't start with me. Jay is one of our VectorVest subscribers, and he's funning me right now. He's having fun with me right now, which I don't mind at all. I love his sense of humor. All right, so now we learned how to reduce the risk on a stock that I currently own and reduce a risk on a portfolio of stocks by learning to play a collar. All of this helps protect my overall portfolio, which is why options are a great piece or a great tool to have in your tool belt. Without that, in your IRA or on your stocks that you own long, when the bear market comes, you're at the whim of the market and you sit there and go, I know this is a great stock. It's just getting beaten up. It's going to return. And a lot of times it does. But do you want to sit through a big pullback in your portfolio? Options will help to protect that big pullback in your portfolio. All right, so now options will help you to reduce risk. What else can options do? Options will help you to lower the cost. Sell covered call options. So now if it's a stock that I own and I sell the covered call, now if the stock gets called away, you know something, I've still made money on the stock. It will generate income, but if it gets called away, I lowered the cost of the stock because I took in a premium. By taking in the premium, it lowers my overall cost on the stock. That's a great thing. And then by selling the covered call up to the call that I sold, that's the most amount of money I can make on that trade. And if it gets called away, I made capital appreciation on the stock, plus I took in a premium. By taking in that premium, it lowers, because I took in more money, it lowers the cost of my stock. Sell put options on stocks you would be willing to buy. That's a little tricky and a little bit more aggressive. Let's say I like Apple. Apple's trading at $200, okay? Let's say I sell a put at $180. As long as the stock's price stays above the put that I sold, I'm going to be just fine. But now the stock goes down in price. And now it breaks through that put price that I sold. That put that I sold, once it goes down below that strike of the put that I sold, the stock gets put to me. I now own Apple at $180. But as long as it stayed above that $180, I took in a premium, it's all mine. And I didn't even have to own the stock. But now I own the stock because the put got breached. I own the stock, but instead of owning Apple at $200, I now own it at $180. That is a great way to get into a stock at a cheaper price that you denote and still make money on the trade. But you got to have the money to cover the purchase of the stock. All right, it's called selling a put naked. But you should only do that on stocks that you like, that you don't mind owning, and you're getting it at a lower price. That's the beauty behind that. All right, so it will lower. So instead of buying Apple at $200, I now own it at $180. I just lowered my cost on that Apple trade. Selling the covered call by taking in the premium, I just lowered the cost on the stock that I own. So options can do a lot of varied things, but learning what they can do will increase your knowledge of them and increase your ability to make money. What else can options do? Well, not only can they lower costs, but they can generate income. So sell a covered call on a stock. If I own the stock, let's say I own Apple, and as Apple is going up, I sell a covered call, and as long as it stays below the call strike that I sold, I'm generating income. And when it gets close to closing above that call that I sold, roll it up. Buy it back, roll it up. I now take in another piece of premium. So the stock's price is going up. I'm making money because I own Apple. I'm making money on price appreciation. And for the premium I sold on that covered call, I'm taking in money. I'm generating income on top of owning that stock. And let's say the stock really starts to get bullish and rise up more. I buy it back, sell a higher call. And I can continue to generate income time and time again on a stock that I currently own. Jay says, so how do you play Lulu knowing that it's falling for the last couple of days? So if Lulu is a stock that I own, I sell a covered call. I don't know what the price of Lulu is, and I'm not going to go into it right now. I'm going to guess that Lulu is at about $100. Let's just guess. So I got the stock, and let's say I bought the stock at $90. I'm up $10 on it, right? Now the stock's price starts to fall. Well, now, where's the last place that the stock had a hard time going up? At $100. I now sell a covered call at $100. As long as the stock's price stays below that $100 strike, I took in a premium. that premium is going to help offset Lulu's price decline. If I didn't do any option trade at all, I'm sitting there watching this price decline on Lulu and I'm worried. But if I sell a covered call, in this case, I'm not selling it to generate income. I'm selling the covered call to offset the price depreciation in the stock. That makes sense, right? I'm selling that premium to help offset the price depreciation in the stock. Now, to sell it as a means of generating income, let's say Apple is running, or let's say Lulu is running. And now I sell a call a little lower, a little higher than where the price is. I took in a premium for selling that covered call. I can generate that income. So I'm not only making money on Lulu's price going up, but because I sold that call at a higher strike than where it is right now, I took in a premium that adds to my income. All right, so hopefully that makes sense, Jay. If you're in a good stock that you like and the price starts going down, sell a call against it. That helps to bring in money to offset the price decline. But if the stock is moving higher, I can still generate income by selling covered call after covered call after covered call. All right? So what else can we do to generate income? Sell a credit spread. All right? That gets into a lot more detail about options. But options, let me back up a second. There's 4 things that make up an option. For anybody who thinks options are confusing, there's 4 things that make up an option. You can buy or sell, let's talk about calls. Calls go up in value as the stock's price goes up. There's puts. Puts go up in value as the stock's price goes down. And with the calls and puts, you can buy and sell them. That's it as far as options are concerned. There's calls, there's puts, you can buy, and you can sell. Every option trade is made up of calls, puts, buying, and selling. Every option trade. Now, it's how you set those trades up that will tell you the type of trade it is. Being a credit spread, that means I have a strike for a call and a strike for a put, or a strike for a call and a strike for a call, a strike for a put, a strike for a put. It all depends on how you set the trade up. But it's only using calls and puts, buying and selling. A credit spread, you can be bullish or be bearish on a credit spread. A bull put spread is a credit spread. A bear call spread is a credit spread, but going to the downside. When you look at that trade, a bull, it's a bullish trade. Puts, I'm buying and selling puts. Spread, I'm spreading strike prices. What is a strike price? A strike price is where you strike a deal with the buyer or seller of where that price should be, or where you want it to be. And as long as it stays within that spread, you're going to make money. If it goes out of the spread, either way, it's going to expire worthless. But if I took in a premium, if it expires above my strike, it's going to expire worthless, but I made the premium that I sold on it. So in this case, on Lulu, I would need to know whether I'm bullish or bearish. If I am probably thinking that Lulu may have a level of support, I can sell a spread on that, Jay. I can sell a put a little higher than where it is right now and buy a put a little lower than where it is right now. The beautiful thing about a credit spread is that I know the maximum amount of money that I can make, which is for the put that I sold. The most amount of money I can lose is where the put I bought. So as long as the stock's price stays in between there, I'm going to make my premium. If it goes to the downside, well, it's going to make money on that put, but it's going to offset that put that I sold. If it goes above, well, then that put that I bought is going to offset going above the put that I sold. All right. So credit spreads, and actually I'm finding that more and more people are selling credit spreads on weekly options. That's a great way to generate income every week. Sell the spread on something like an index, like the Dow, primarily the S&P 500. I can generate income every week because they expire at the end of the week, and as long as the stock stays within my 2 strikes, I am going to be just fine. So people who have already gotten to the point where you're comfortable knowing when to buy, what to buy, and when to sell, generating income by way of credit spreads is a great way to do that. We actually have option courses that show you step by step how to generate income selling credit spreads. Something that if you haven't done already, you might want to consider, but understanding in this presentation on how one of the 7 secrets to making money in the market, options is a great way to do that. And selling credit spreads, possibly the weekly credit spreads, is a great way. And if think about it. If you can make $100 a week, just think about it. I'm thinking about it on a low level. If you can make $100 a week in a year, how much is that? $5,200 a year? That's on the way low side. That's on the way low side. That's not a bad stream of income. And if you can get really good at this, if you can do about $100 a day doing this, your stream expands exponentially. You do the math behind that. Now, am I going to tell you that everybody in this room can do that? No, not until you learn how to do it properly. That's the key. Remember on that first slide, it says these option trades can be done if you do them properly. Let's see. Kev says, what's your name? Got here late. My name is Glenn Tompkins. I'm one of the senior instructors here at VectorVest. All right. And Jay says, is that the options paycheck course? The answer to that, Jay, is yes, it is. It's the options paycheck course that will go and delve deeper into selling spreads. All right. And I believe that from the standpoint of selling credit spreads on a weekly basis, you can generate some income. And I'm keeping it on a very simple level of generating income of $100 a week. That's $5,200 a year. That's $5,200 a year that you didn't have before while investing in the market. So let's say you do good in the market. Would you be adverse to adding another $5,200 on a very slow level to your portfolio? I don't think anybody in this room can tell me no. I don't think anybody in this room can tell me no. And that's just learning the basics, the simplicities behind trading options. Learning that this is the 5th secret to making money in the market. How much is the course? You know something, Kev? Do me a favor. Hold on. Jay is here. Jay, how much is that course? It's not cheap. It is not a cheap course. But if you want to know step by step what to look for, if Jay doesn't give me the answer, call out product support, Kev, to get that answer, because I don't want to give you bad information. All right, so if Jay can put the price out there, it'd be great. If not, give our product support staff a call. But if you want to know from the beginning to the end on how to trade a credit spread, we show you everything to look for. We show you where to find the stocks in the software. We show you what attributes are needed to put the trade on. We show you how to exit the trade. We show you how to take the profit. We show you everything, every nook and cranny on how to set that trade up and trade it. All right? That's what we do. All right, so part of what options can do can generate income. What else can options do? Increase alternatives. Make money whether the stock goes up or down. So now, how about this? How about earnings comes out on the stock? How about there's an options play to help you to make money on that stock no matter which direction it goes? How many times have you seen a stock beat earnings and then forward guidance tanks it? Well, we got a trade for you by way of options that'll help you take advantage of that trade. It's called the straddle. You buy long calls and long puts at the same strike price on the same expiration date. So normally if you buy an option, general rule of thumb, you want to buy an option for at least, I'm going to say, put it out there for about 3 months, 45 days to 3 months. What you need to do as a buyer of an option, you need to buy the time to be right. Because the trade may not start off in your direction, but if you bought the time, you've got more time for the option to come into play and work in your direction. Now, as a seller of an option, you normally want to sell for about 30 days or less because that time value drops off tremendously in the last 30 days. So as a seller, I want to sell the buyer the least amount of time to be right. Chances are, because most stocks expire worthless. You'd rather to learn to be a seller of an option, learn to sell those credit spreads until you get comfortable learning how to sell a naked put. I probably would never sell a naked call. That's just me in general. But I will, learn how to sell those credit spreads. Do them on a weekly basis. Now, when a stock turns around and earnings comes out, if you buy the call and the put at the same price, I don't like doing iron condors. Oh, you like doing iron condors. I'm going to get to that in a second. Somebody put the link out there already for you for the options paycheck course, and thank you for that. But I'm going to talk about iron condors because if the stock goes up or goes down and you're not sure which way it's going to go, you buy, it looks like a V-shaped trade. Anyway, I don't know. Looks like a V-shaped trade. You buy a call at one strike price, you buy a put at the same strike price. No matter which direction the stock goes, it's going to go in one direction. You're going to make money no matter which direction it goes. So buying a straddle is ideal for earnings coming out. How about on an FDA approval on a drug stock? Straddles are a way to go as well. All right, so if you don't know which way the stock is going to go, you're going to spend more money on the trade, though, because you have to take money out of pocket for both the calls and the puts. All right? But it's a great way to be able to take advantage of a stock that you're not sure is going to go which way, but you know it's going to move one way or the other. Straddles are a great way to go. Now, how about you can buy stocks, you can take advantage of when stocks are going up or down. How about you can take advantage, we're not going to do that yet. How about you can take advantage of stocks that move sideways? Bruce, that was Bruce? Bruce says he likes condors. Condors play stocks when they're moving sideways. So no matter which direction a stock is moving, options will help you take advantage of it, and we can show you how to take advantage of a stock moving sideways. So it's not going up, it's not going down, but you can still make money on it. And Bruce likes iron condors. That's looking for stocks primarily that are in a channel. And you can make money as long as it stays in that channel. So you can make money on options, whether the stock is going up, whether the stock is going down, or whether the stock is moving sideways. In just stocks, buying stocks, you only make money if the stock goes up or goes down. In options, we also include the ability to make money with the stock if it's moving sideways. Options give you a lot of flexibility in playing the market. And if you learn, I told the story that I made a lot of money in the market within 8 years using VectorVest. In the beginning, with only using $1,000 of money, I made a lot of money using options. In 2007, 2008, I made a boatload of money playing options. So, whether the market's going up and whether the market's going down, I really don't care. Options will afford me the flexibility to take advantage of any market's conditions. And options are a great way to learn how to do that. And if there's anybody out there who's still nervous about what options can do for you, take a look at that link that was put out there about the options paycheck course. Like I said, it's not cheap. But understanding, looking at these slides, that options are designed to be less riskier than stocks. Take that misnomer, put it to bed. Options are designed to be less riskier than stocks. Options leverage how much money you have to put out in the market. This speaks to a lot of people who don't have a lot of money in the market. Options are a great way to stay and play with the big boys and still make money in the market. $1,000 took me to over $90,000 in 8 years using options. 8 years, $1,000 to over $90,000. Now, is that going to be for everybody that's in this room? No. But I had the power of VectorVest to help me to place my trades at the right time, to understand what option trades I was putting on and why. So if there's people out there who's still wondering if options are something that they can look into, that's from a personal experience, folks, of being with VectorVest over 14 years. Options are a tool that are going to be essential in your ability to increase the opportunity to make money in the market. So for everyone who was nervous about hearing about options and you gave me an opportunity to talk to you about options, for that I thank you. For those of you who are already playing options, hopefully I've just reignited the fire in you to do more of playing the options. Options are a great tool to have. And make sure you have the right tool. Keith, I go back to you. Make sure you have the right tool to play the market. Right now, I want you to learn how to know when to buy, what to buy, when to sell. Bruce, I know you already know how to trade options. Just make sure that you're honing your skill set to be able to master your ability to make money. So that goes, and Jay, you need to just go back through your set. You already bought the options paycheck course. Use it, man. Don't just let it sit there. Use it. You paid for it. Use it. And if you need help, Jay, just you know how to reach out to me. Use it. All right. So that's everything in regards to the fifth secret, which is learning how to play options. Let's go to the sixth secret. The sixth secret is stay informed. Remember, we already talked about utilizing the home page? That's pretty much it in a nutshell. Stay informed. Know what's going on. Part of staying informed is knowing what's going on in the software at all times. Let's see. Jay says the option, it's $9.95. $9.95 is what we charge for the options paycheck. The options jumpstart is a great primer. And that primer really talks about understanding calls. And you know, Kev, if you're ready to step out in the world of options, that's probably a good course, which is the Options Jumpstart. I believe it's like $295. Don't quote me on that. That's what I think. It's a lot less expensive than the Options Paycheck, but that course teaches you how to play calls, how to play puts, and how to sell covered calls. All right, 3 of the basic option trades. That might be a good step for you, but really, Kev, I really want you to, was it Kev? It was Kev. Who was the one that said about learning? It was Kev. Was it Kev?
Lose it?
No. Scroll back up. Who talked about learning how to, yeah, I need you to, oops, that was, scroll back up. I'll do it. Stop touching it. Say hi, Joey.
Hi.
All right. That was Keith. Keith talked about, what you should do as far as learning first. Keith, stick with when to buy, what to buy, when to sell. Lock that in, all right? When you're ready to jump, I would honestly say anybody who's new to options, take a look at the Options Jumpstart course. It teaches you how to know, it teaches you calls, puts, and covered calls, all right? So let's go back to staying informed. Keep up with new developments in the software, all right? Keep up with new developments in the software. Read the views. How many of you, and I'm not going to ask that question because I'm not going to put you all out there. If you are a subscriber to the VectorVest software and you do not read the views, you are doing yourself the biggest disservice that you possibly can. You are doing yourself the biggest disservice that you possibly can. Read the views every night. Every night we provide for you the daily color guard report. That's number 2. One of the people like myself, I am a senior instructor here at VectorVest. Once every few weeks, I will do the daily color guard report. It's a means of knowing what's going on in the market today and preparing you for tomorrow. Stay informed. Watch our special presentations. We do strategies of the week every week. Watch them. That's a good way to stay informed. Now, why is that such a good way to stay informed? Because if you don't have a trading plan in hand right now as a VectorVest subscriber, we're going to teach you every week how to use the VectorVest software. You're going to see a special presentation that reaches out and touches you and saying, wow, I like that. I want to put that into play. Use it. We do that for you every week. Now, if you are currently in a trading system that you're comfortable with, understanding when to buy, what to buy, when to sell, and you're good to go, the only time that you're going to change your strategy is if we come up with a special presentation that you like better. You do not change your trading system every week just because we give you a special presentation every week. The only time you should ever change your trading system is if we give a special presentation that you feel better fits how you invest in the market. That's the only time. But every week, especially because we get new people every day, we provide a means of learning how to use the VectorVest software. We provide a strategy of the week or a special presentation. Watch our educational webcasts. I do a lot of webcasts, whether this is one of them as far as a live stream or webcasts that we do within the software as a VectorVest subscriber. You'll hear me say more than one time, we are not putting you out. This is not baptismal by fire. We walk you through what you need to do to effectively make money in the market. This is what it's all about. This is a subscription service. Do you think that we make money on the trials that we send out to you guys? No. We make money on the subscriptions. The only way you're going to subscribe to this software is if you're making money. If you're not making money, you won't subscribe. So our job is to not only get you to subscribe, but to teach you how to use the software. Who else is out there that does that for you? What other service out there has that personal connection to you from that perspective to teach you how to use their software? And it's not that we ever just throw you one off. We are going to work with you. Let's go see. Yes, it was me, J295. Mike says, read the views to get the news. I like that. I'm going to use that, Mike. I'm taking that. I'm taking that. Use the news, use the views to get the news. I like that. All right, I think I'm gonna trademark it now so that Mike can't use it again. I'm only messing, but I like that. Use the views to get the news. It makes sense. All right, stay informed, folks. Those are 4 ways within the software to make sure the 6th secret is accomplished. Stay informed. That is the 6th secret. You'll notice that all of the secrets that we've put out there are simple secrets. They are commonsensical secrets. There's nothing that's esoteric here. There's nothing that says, well, you know, you have to wait till a 70-degree day when the sun is at the horizon and wait for the Dow to be. It's nothing like that. It's nothing like that. 7 secrets to making money, very sensible. It all depends on just how much you're willing to trust the software to do those simple things. This whole idea is very simple. I know you're trying to, it's very simple on what we need to do. All right? And that's why this has been a good mini-series, especially to a lot of people who are not currently in the market. And if you are currently in the market, these secrets are designed to add to what you know. Not take away, but add to what you know and lock in. You know, no matter what you do in life, you have to hone your craft. Whether it's where you are working, whether it's an instrument you play. I'm a DJ, so I got to hone my craft of being a DJ. If you're a singer, you hone your craft in being a singer. So think of it this way. If you're an investor, you hone your craft. These 7 secrets are designed to help you hone your craft. Think about that. Think about that. It makes sense whether you want to agree with it or not. It makes sense. All right? And the last thing, the last secret is to be an optimist. Now, being an optimist doesn't mean that you need to be a Pollyanna. Don't be unrealistic. Don't just sit around and just go, well, you know. Be active in what you do. Be optimistic about what you do. You know, and if you go into trading with a negative mindset, you're going to get a negative result in the end. Understand that you have a software, you have a service that's going to help you. Trust it. But in order to trust it, though, you've got to do some work on your own, because I can tell you to trust anything. Anybody can tell you to trust anything. The only way you're going to ever trust anything is when you do it. That's why we invite you to take a trial. That's why we invite you to do a getting started training with one of our product support reps. That's why we invite you to give us a call when you have a question that needs answering. That's why we invite you to send an email if you've got issues. That's why we invite you to call at any given time between 7 a.m. in the morning to 11 p.m. at night. Be an optimist. Know that you set realistic goals for yourself. Just because you learn that the VectorVest software can provide a lot of information, don't come in here knowing or thinking that you're going to make 500% on your trades by the end of the year. That's not being realistic. I said be optimistic, not unrealistic. Take a step out. If you're currently making money in the market and you say, I want to outperform the market on a monthly basis, that's a step. Or you say, with the money that I have, I want to make $100 a month. That's a start. And as you get more confident in the software, you can bump that up. Be optimistic, but be realistic. Say that to yourself over and over again. This 7 secret doesn't want you to just sit there and think that everything is going to come to you. All right? Yes, I want you to think as the glass is half full. But I don't want you to think that it's not going to take any work for you to get to where you need to go. It will still take work. A lot of the heavy lifting is already done by us. All right? A lot of the heavy lifting is already done by us. But you've got to step the foot out to be able to say, all right, I'm ready to trust VectorVest. And now, something, I'm not going to use all my assets. I'm going to take a small portion of my assets. Something, maybe I do need to learn about options. Take some of that money from your assets, invest in the options course. Look at either the Jump Starter course for brand new people, or if you do have some options knowledge like Bruce has, maybe you think about the options paycheck course. All right? But take a small, and something, when you take that money and you spend it, don't look at it as an expenditure. Look at it as an investment in honing your craft. Change the mindset that you have. When somebody looks at any one of our courses and go, man, that's expensive. Well, it's because you're thinking about it a little different. You think about it the wrong way. It's not that it's expensive. Anything that's worth anything is worth spending money and investing in, right? Think about that. Anything that you buy is worth an investment. If you're trying to increase or hone your craft, you need to invest in your craft. Now, I don't do a lot of selling on these live streams, and I'm still not trying to sell you anything right now. But when I strike up the conversation about options, if it really sparks an interest, you really need to consider looking at one of those 2 courses. That 5th secret, folks, is very crucial in increasing your ability to make money. Now, am I going to change everybody's mind in here about options? Nope. And that's fine. But something, if you didn't change your mind, are you at least thinking about it? That's what means more to me than not. Just think about it. Options are a great way to make money in the market. You can either protect yourself, you can either generate capital, you can spend less money on controlling the same amount of shares. That 5th secret is so key. But don't sleep on being an optimist. All right, that's the 7th secret. Don't sleep on that, because being an optimist is important. Have the right attitude coming into your trading. Don't bring the negativity into the trading, but don't be unrealistic. If you set unrealistic goals, you'll never hit them. And then you'll think that trading is just sucks. All right, be realistic. All right, got about 7 minutes left. Tell you what we're going to do. Did you take away my desk? No. Anybody have any questions? Let's start off there. Anybody have any questions in understanding how to put all 7 of these secrets together? These 7 secrets are sensible secrets. These 7 secrets don't take a lot of thinking on your part. And I'm not wanting anybody to be sheep out there. I want you to get an understanding of what the software will provide for you. This software has been around for a lot of years. I've only been here for just a fraction of the time that the company has been here. But I love what I do, and I believe this mini-series of the 7 secrets can turn your life around, can turn your investing life around. It really can. All you have to do is learn to apply them. You've now learned them. The videos will replay again. If you missed secrets one, the first one, the second one, and now this is the 3rd one, if you missed any of them, go back and look. Take notes. take notes while you're looking at the video. I think that as you take those notes and you start to implement them into your current day's trading, you're going to see a big difference in your trading. You're going to see a big difference in your trading. All right, now if nobody was asking questions, I got 5 minutes left, but if nobody's going to ask questions, I'm not afraid to end the webcast or the live stream earlier. All right, I'm giving you an opportunity, especially people who are new to options. I'm giving you an opportunity to get your questions answered live. All right, don't worry about if you think it's a silly question or not, doesn't matter. This is a great opportunity to get your questions answered live in this forum of the live stream. But if you still want to keep it to yourself, that is up to you. And if I don't get any questions, what I'm going to say, it's been my pleasure to give our first mini-series. What you said, Joe? What did you say? All right, so Joey just mumbled. So what Joey says, if you like, let me know if you like or dislike the streams. All right, if you think that they're helpful, let me know. If you don't like them, let me know. That's the only way we're going to make these better. All right, so I do want comments from the people that are in the room. By all means, even if you didn't ask any questions, I still want to know from everybody that's in the room. If you think that these webcasts or these live streams are good, just type a yes. If you think that these live streams are not good, give me a reason why you think that they're not good, and let's see what we can do to work it better. All right, that's all. So that goes for just everybody. I got it, Joey. Just for everybody in the room. Just let me know. Just let me know. And I'm not seeing a lot of people doing anything, but all right. There is it. Great point. Not reading the views is a waste. There you go. Keith says with regular stops, we have a stop loss. Yes. As a means to get out of a stock, always have a stop in place. Always have a stop in place. Jay says, thanks, Glenn. I always learn something. Great. Mike says, awesome. Keith says, with options, how we have a way of protecting a drop. So knowing with options, Keith, the most amount of money, if I bought an option, the most amount of money I can lose is the premium I paid. Let's say I paid $2.50, right, to control per share. When I know that the most I can lose is the premium I paid, maybe I use a loss of, if the stock goes down 10, 15%, not all of my premium, maybe I use a portion of my premium as a way of stopping out. Does that make sense? I use that as a means of getting out. Let me go back to this real quick. Mike says, awesome, excellent. Jay says it's helpful. All right. So the big thing is I'm trying to find out if there's anybody who does not like the stream. If you don't, I'm not seeing that. That means that this is good to go. All right, this is good to go. And with that, folks, I'm going to end today's presentation. Next week, we're going to start a new mini-series next week. Join us at 12 o'clock for that. I believe it's something along the lines of teaching you how to set up a trading system. All right, so next week starts a new mini-series. Be here for that. Keith says he loves the stream. Outstanding. I'm glad to hear that. But again, nobody in here didn't say anything to the negative. That's a good thing. All right, so folks, with that, have a great weekend. Hopefully these streams are helping you with your current investing. That's what it's all about. We want to make sure that you guys are learning something, not just me talking, that you guys are learning something. So with that, folks, have a great day. Have a great weekend. Adios. Arrivederci. Ciao. Au revoir. Sayonara.
Faster, smarter, better trades? You're just one tap away with the VectorVest mobile app. Just create a watch list of stocks. With one tap, VectorVest automatically rates them for value, safety, and timing, marks them buy, sell, or hold, and ranks the list from best to worst. Just one tap. The all-new VectorVest mobile app. Free for 2 weeks. VectorVest. Clear direction in the palm of your hand.
Hi, everybody. Did you like that presentation? Well, right now, we've got other videos for you as well. Click here and click here. Better yet, click them both. Thank you for being as part of these presentations. Take advantage of the information that's there for you. Have a great day.